Hello, fellow investors. Today we'll be looking at British American Tobacco, the tobacco giant from the UK. This is a company that has been on the struggle bus since 2017, so that's 7 years now of, you know, underperformance, shall we say. The company never really recovered from this huge decline that it experienced in 2018, 2017. This is a company that's located in the UK. It's part of the FTSE 100, which is the index that groups up all the largest 100 companies from the UK. And if you take a look at this index, it really has gone nowhere for, 7 years since 2017. So could this be a place to hunt for bargains and to find value? Well, hopefully that's what we're going to find out today. British American Tobacco has a dividend yield that's extremely high, almost 10%. Typically, companies that have dividend yields that are this high tend to cut it in the near future just because it's unsustainable. The cash flows are not enough to cover the dividend yield. If we take a look at the multiple for this stock, it's currently at 5, which is incredibly low. This means that basically, if you make an investment and buy one stock of British American Tobacco, you would be repaying your entire investment in 5 years. That's insane. That's a really, really good price. Now, what we need to find out is this a value trap or not? Is this a good deal or is British American Tobacco actually selling super cheap for a reason? In this video, I'll be using Rated A as my tool. This is a research platform that I've created where I rate companies based on their quality and their long-term prospects. And the way I come up with these ratings between A to D is actually quite straightforward. There are only three things that matter for the long-term prospects and the compounding potential of any company. And these can be separated into three categories. So moat, profitability, and safety. So what do I mean by moat? It's actually just the durability and the robustness of the business model. So I look at how easily it will be for competitors to come into the market and take market share from the company. Some things I look at are pricing power of the company. Does the company have network effects, a really good brand, and intangible assets like patents or economies of scale? Under the profitability umbrella, I just look at the company's ability to generate real value. So I look at return metrics, specifically cash flow return on investment, which is just an alternative to the typical return on invested capital or return on capital employed, but using cash flow instead. I also look at the company's future growth and scalability. I look at recurring revenue or the mission criticality of the company. And under safety, I just look at the reliability and the predictability of the future profits of the company. In other words, just risk. So, what are the odds that an adverse event will happen, and what would be the impact if that adverse event does happen? I also look at things like debt, government regulation, litigation, and just overall secular trends. For each of these categories, I assign a star rating out of 5, and then I add these ratings to generate the final quality rating. So, really, what I'm looking at is long term compounding potential. And when I say long term, I don't mean 1 year, I don't mean 3 years, but really 10 years. Ideally, this is the amount of time you want to hold a stock to see the real compounding take place. And really, this is the way that the best investors have done so well in the stock market. Here I'm talking about Warren Buffett, Charlie Munger, Terry Smith, Guy Spear. These are people that try to buy and hold forever. But in order to do that, you need to buy quality companies. And only once you do that can you let compounding really take over and do its magic. If this is an investment philosophy that speaks to you, definitely go check Rated A out. I'll be leaving the link in the description below. It's completely free to sign up. There's a 2-week free trial. So you can cancel at any time if you realize that it's not for you. And if you have any stock requests or companies you want me to look into, come say hi and leave a comment in the community. So, based on the company's moat, profitability, and safety metrics, BAT gets a C rating. But this is just a guide. It doesn't mean that it can't be a highly profitable investment at the right price. So let's dive a little bit deeper and see exactly why British American Tobacco deserves a C rating. Starting with business activities. What does the company do to make its money? This is the first step in analyzing any stock. Well, the company sells a multitude of products, all related to tobacco and nicotine. They've got their traditional cigarette brands like Dunhill, Pall Mall, and Lucky Strike. They've got a whole bunch of next generation products, or what they call, which is less harmful than cigarettes. So they've got Views in vapes, Glow, which is a heated tobacco stick, Velo pouches, and oral tobacco Grizzly. And one of the most important things to note is that this really is a global company. And while they make most of their sales in the US, they also have a significant presence in the rest of America, in Europe, and in Asia, other than China. Well, that market is completely owned by a state owned company. One last very important thing to note is that British American Tobacco owns almost 30% of this company in India, ITC Limited. So, what is ITC? Well, ITC is a really big conglomerate in India that sells almost everything that you can think of. They've got a large portfolio of fast moving consumer goods like food and all that type of stuff. Of course, most of their business is comprised of this segment, which is cigarettes. They also own a whole bunch of hotels, and they've got everything from an agricultural business. They have paper boards, paper and packaging. So, all that to say, this is a really large company in a very fast growing economy that is India. It has a P ratio of 26, so not the same type of low multiple that you see in Western companies that sell cigarettes. And British American Tobacco owns 30% of this, which is the equivalent of a $20 billion stake, which is really, really significant. Because if we look at British American Tobacco's listing on the New York Stock Exchange, which is in USD, we can see that their market cap is about $66 billion, which means that their entire stake in ITC is roughly worth 1/3 of the entire company's market cap. So that's something that's quite significant. Next, let's move to the competitive analysis of this business. What makes British American Tobacco special? What prevents competition from moving in and taking British American Tobacco's market share? One of the first things that people usually point out about the tobacco industry is that it's in decline. And that is true. People are smoking less and less, and so less cigarettes are being smoked every year. Surely that can be good if you're a company and you're selling a product that is being less consumed by people. And as we can see, the change in cigarette volume was down 20 basis points, which is very, very small actually. 20 basis points is only 0.2%, I believe. And so for this year, the change was actually quite small, but in general, it is true that cigarettes consumption is going down. But if we take a step back and we look at the value of the worldwide cigarette market, we can see that it's actually not at all in a decline. In fact, it's increasing in value every single year. Well, as you can probably imagine, this is due to tobacco companies having extreme pricing power and being able to raise prices faster than people are stopping to smoke. If we look at some financials quickly for British American Tobacco, we can see that revenues are not at all in decline as well. Apart from this big jump, we'll come back to this later, but every single year, the revenue is either flat or going up slightly, as we can see from 2007 to 2014-15 and then again from 2019 to 2022. Same with the free cash flow and the free cash flow per share. Overall, the trend is very positive. How do we explain this? Well, that's the power of nicotine, baby. Nicotine is highly addictive. And so, for many people, smoking is a daily or even hourly habit. And when people buy a product out of habit, it often leads to strong brand loyalty. And this is exactly what we see in the tobacco/cigarette industry. People that are used to smoking one particular brand will do anything to keep buying that type of brand. Even if they have to, leave the store and walk a kilometer to another store to find their brand, they're willing to do that. This brand loyalty leads to low price elasticity in economic terms, or in other words, super high pricing power. This means that every year, British American Tobacco can jack up the prices on their cigarettes, and people are still gonna willingly pay for them. And a lot of people think, well, this surely can't keep going on forever, right? But people have been wondering that for the past 30 years. And the reality is that markets like the US, which are really important for British American tobacco, have quite low prices when you look at the median income and the price of a pack of cigarettes compared to other countries like the UK or Australia. So what this means is that British American tobacco, in fact, has way more room to grow prices for many more years without losing too many customers. Another competitive advantage for British American tobacco is government regulation. Simply put, some activities like advertising are just restricted by most governments in the world. This can mean two things. The first is that large companies like British American Tobacco and other tobacco giants don't have to spend that much on advertising. Usually, big companies that sell consumer goods, whether that be food or house products or whatever it is, they need to advertise a lot to catch the consumer's attention. For tobacco companies, this isn't really a problem, and that means they can make huge savings on advertising budget. It also means that once someone is loyal to a brand, they're usually going to stay loyal to that brand. Since no one else is advertising, it means that consumers have very little incentive and exposure to other brands, or incentive to move to another brand. Lastly, and perhaps most importantly, new entrants, like smaller companies, would find it very hard to reach scale if they're not allowed to advertise their new products. How are consumers going to find their products when they can't be advertised? So, this lack of advertising has the double effect of keeping the market for the big players and preventing the smaller players from entering the market. Speaking of government regulation, we have to speak about health and safety agencies like the FDA in the US and EMA in Europe. These agencies are very strict about which products are able to be marketed in their respective territories. And so, if a company wants to bring a new, safer product to market, an alternative to cigarettes, they have to file a super expensive application to these agencies, and they have to go through many trials to demonstrate that this product is safer. And this is very lengthy of a process and also very expensive. And when I say expensive, I mean tens of millions of dollars. So this sum is just not attainable for many of the smaller players. The third competitive advantage comes from British American Tobacco's size. For tobacco manufacturers, the biggest expense is also a fixed expense, and that's maintaining and running the factories where the cigarettes are built. Whether these companies manufacture 100 million or just 1 million cigarettes, the cost of running that factory will most likely stay the same. What this means is that there's an inverse correlation between the volume of cigarettes that are made and the average cost per unit. British American Tobacco is one of the largest cigarette makers in the world. They're by far the number one in sales, and I believe they are in the top three in terms of volume. A direct consequence of that is that making cigarettes is essentially cheaper for British American Tobacco than any other company. The last competitive advantage for British American Tobacco is diversification, both by product and by geography. Let's focus on product first. Yes, cigarettes still make the vast majority of British American Tobacco's sales, but next generation products are quickly gathering pace. As we can see in 2022, revenue from new categories increased almost 40%, from 2 billion to 2.8, almost 2.9 billion. So while this is still a small percentage of the total revenues, which are at 28 billion approximately, this category is quickly catching up, and the company expects new categories to make up a larger and larger portion of the company's total revenues. This means that even if cigarette consumption really starts to take a hit much faster than expected, and cigarettes do end up disappearing, which is probably unlikely, but if that were to happen, the company is one of the most diversified of the big tobacco by category. So that provides them with a little bit of a safety cushion when it comes to that. Also, as I mentioned earlier, British American Tobacco is highly diversified geographically. What this means is that if any government around the world decides to pass a legislation that's unfavorable for a tobacco company like British American Tobacco, the company would probably bounce back because at the end of the day, that government, unless it's the US, would probably make up, not too much of the total revenue of the company. That concludes the competitive advantage section. These are by far and away the most important competitive advantage for British American Tobacco. Now let's move on to the risk and uncertainty section of the analysis, starting with next generation products. You've heard me mention next generation products many times throughout this video. And one thing that everybody agrees on is that these products, the next generation products, are the future of the tobacco industry and will little by little replace traditional cigarettes. But one thing is almost for certain. These next generation products will probably not have the same great economics as cigarettes. For example, I mentioned earlier that people have extreme brand loyalty towards their favorite cigarettes. Well, nobody knows if this will also be replicated when people stop smoking cigarettes and start using vapes instead. Governments are also lagging a bit behind in this category. So nobody knows still what type of regulation will affect all these types of disposable vapes and all these other nicotine products. Nobody knows if advertising will be banned for these products. And while companies trying to bring next generation products to markets need to file applications with health and safety agencies like the FDA, sometimes these smaller companies can just release these products without doing that. And the government agencies lag behind and sometimes take years before banning these products from the markets. So that gives the opportunity for all these smaller players to come in, play with the big boys, and earn a lot of money before getting banned, so to speak. Government intervention is also a big risk for big tobacco companies. It's a constant threat with a low probability of actually happening, but with a potentially very high impact. For example, in Australia a few years ago, the government passed a tax on cigarettes that led to an increase in price of a pack of cigarettes from a few dollars in the late 90s up to $40 a few years later. So a huge increase. And this obviously led to many people to quit smoking. That's a very good thing for public health, but maybe not so good for big tobacco. Another example is a few years ago in the United States and even in Europe, when both these places decided to put a ban on menthol flavored cigarettes, which was at the time a pretty large part of British American Tobacco's business over there. Last but not least, New Zealand decided a few years ago to make cigarettes illegal to anyone born in 2009 or later, effectively creating a generational ban on cigarettes. Imagine that a law like this were passed in the US and British American Tobacco's entire business could be destroyed. The counter to that is that when governments decide to do this, A, they open the doors to the black market flourishing because obviously people will not stop smoking cigarettes. They want their nicotine fix. And second of all, governments deprive themselves of very valuable taxes that are paid by these big tobacco companies. And so, for example, New Zealand, just a few years after creating this ban, they decided to scrap it. So, as you can see, this is another example that it's very hard for governments to just ban cigarettes. The last risk I want to mention is diversification. Big tobacco companies like British American Tobacco tend to make a lot of cash, and they also tend to give in to public pressure to diversify. And a lot of these diversifications end up being diversifications, as Peter Lynch would say. In 2017, British American Tobacco decided to acquire a company called Reynolds, which was a cigarette maker in the United States with a big portfolio of very iconic cigarette brands. The problem is they probably way overpaid for that acquisition. It added a ton of goodwill to British American Tobacco's balance sheet and also a lot of debt. If we just take a look at financials real quick, we can see that the acquisition caused revenues to spike in 2017, which is only a good thing if shareholders don't get diluted. As we can see, shares went up, but that didn't lead to a dilution in free cash flow. All the opposite. It was actually very profitable for shareholders. But if we look at the returns, so the cash flow return on investment, this is where we start to see the damage. Because so many assets in the form of goodwill were added to British American Tobacco's balance sheet, these are inactive assets, but they still get counted in the return calculation. So while this used to be a company with excellent returns, these returns just dropped and have stayed low ever since the acquisition. Something I want to mention is that BAT announced in December of 2023 that they were going to write down a whole bunch of assets that they acquired through Reynolds in 2017, basically decreasing the value of the intangibles on their balance sheet. What this means to the market is that British American Tobacco is saying, wait, the brands that we acquired are actually not worth this much, they're worth way lower. The market took this very badly and punished BAT's stock on that day. But personally, I think this is actually a good thing for British American Tobacco. It really doesn't mean anything to the business what the value of the intangible is on the balance sheet. The operations will stay the same. The only thing that will change is that the return on investment will actually start increasing again with less dead weight on the balance sheet. The last thing I want to show is the amount of debt that just spiked on the balance sheet in 2017. This is a real letdown for the company because now that interest rates have spiked, the company will have to pay a lot more interest on this debt. Management has announced that they will prioritize to pay down the debt, and to be fair to them, they have been doing this. However, by prioritizing paying down debt, they haven't been able to give back capital to shareholders through buybacks or dividends. And now that the stock is very, very cheap, selling for a 5 times free cash flow multiple, it would have been a great time to buy back shares. But the company just lacks the flexibility to do this. So now that we've gotten through the meat and potatoes of the qualitative analysis, I just want to go through a few more of the financials before we move on to the final rating. So first off, I want to say that the cash margin has just been increasing very steadily over time. And this is basically a ratio of the free cash flow against the sales. So we can see that British American Tobacco is just becoming more and more profitable the less cigarettes it has to make. This is also reflected in the capex ratios. The company is just spending way less on capex, so it's basically surfing on the wave of profitability. It's very, very capital light business. If we look at the debt, I already mentioned that it's quite high with this company, but these are the two ratios that we really want to focus on with debt. Interest coverage just means how easy is it for the company to cover its interest payments with the current free cash flow. And as we can see, the current interest coverage is around 6.6, which means that British American Tobacco can pay back its interest 6.6 times with the current free cash flow. So this is quite safe. And if we look at the debt to free cash flow, we can see that it's currently at about 3.5. And this just means that it would take about 3.5 years of free cash flow for BAT to pay down its entire debt. Ideally, we would want to see this below 3, but 3.5 is actually quite not that bad. Moving on to the dividends, the company hasn't really been increasing them that quickly because, as I mentioned, they're currently prioritizing to pay down debt. But the dividend is really well covered with the free cash flow. There's lots of room here to increase that dividend. And all this tells me is that the company is highly unlikely to cut that dividend anytime soon. The last thing I want to look at in the financials is the free cash flow multiple history. As we can see, from 2013 to about 2018, this company was quite highly valued by the market, with the average multiple being around 18. Now, that's still higher than the average multiple of the market historically, which is about 15. But we can see that the acquisition of Reynolds really changed things, and ever since, the multiple has been hovering below 10, and it's never been as low as it is currently, around 5. So, in summary, I want to go over why this company gets a quality rating of C and to explain all of these ratings more specifically. The mode gets 4 stars out of 5, and that's just because BAT enjoys a remarkable competitive advantage in the traditional cigarette business, just due to the addictive nature of tobacco and government regulation in the industry. The reason why the star rating isn't 5 is because we don't know if the next generation products will have the same type of mode as the traditional cigarette business. And so, because of this uncertainty and the way that these NGPs are going to be the future of the industry, I can give a 5 star to British American Tobacco. If we look at the profitability, the company gets 2 stars out of 5. What I like about British American Tobacco is that they generate lots of free cash flow and they require very little capex to maintain the business. However, the cash flow return on investment has really suffered since the acquisition. The company's balance sheet is now quite bloated, and also growth is not that easy to come by. Yes, the company has been growing revenues and free cash flow really well lately, but that's also due to the acquisition of Reynolds, which added a lot of revenues in total. But with the write down, if British American Tobacco is able to increase their cash flow return on investment, I could see this rating going up to 3 actually. Okay, lastly, moving on to the safety. I do like that British American Tobacco is highly diversified, both geographically and by products. The only thing is that this company still operates within the unloved cigarette industry, which constantly faces pressure from the public and from governments. And so you never really know what types of policies are going to be enacted by any government. For example, one day the US government could really hurt this company by enacting a ban or something like that. And just because of that uncertainty, the company can't get more than a 2 star rating. So adding all of these stars up, that's 8 out of a possible 15. And so the company gets a C rating. All right, now we get to the fun part, which is the valuation. So just because a company gets an A rating, which means it's very high quality, doesn't necessarily make it a great investment. The same way, just because the company doesn't get an A rating doesn't mean that it can be a highly profitable investment if the price paid is very, very low. Imagine if you could buy this company that makes a ton of cash flow for $1 today, that would be an amazing investment, right? So of course, we'll never get to buy this company for $1 in total. Right now it's 66 billion, but you get the idea. And that's why we've created the shareholder return calculator on Rated A, which lets you predict what type of return you can expect according to some assumptions. So this calculator estimates what type of return you could expect by buying the shares at a current price over the next 10 years. So for the initial buy price, I've added 23, which the stock currently is at 23.66. So this is assuming that the stock drops just a little bit more and then I would buy. I've input the current revenue for the last full year, which was 2022. For the revenue growth rate, I've chosen 3%. Now, this is just me trying to be sort of conservative. We can see that the historical revenue growth was 2% for the last 3 years, but it was 6% over the last 5 and the last 10. So I think 3% is a good compromise. Next is the estimation for cash margin. I've decided to go with 35%, which is what British American Tobacco has been able to do for the last 3 years consistently. And with the estimated shares outstanding in 10 years, I've tried to be conservative and put 2.2 billion. Now you can see that the shares outstanding went up with the acquisition to slightly more than 2.2. But I do believe that as British American Tobacco pays down debt, they'll start to return capital to shareholders through buybacks, and that the share count can easily get to 2.2 billion in 10 years. Next is the estimation for the terminal multiple. This is just the multiple that the stock will command at the end of the 10 years. I've decided to go with 10, which is higher than, the past few years, but lower than what the stock used to be at. So basically, I'm assuming that throughout the next 10 years, the multiple will start to creep back up to what the company was at originally. The next section of this calculator is dedicated to the dividend. For companies like British American Tobacco that pay 9%, almost 10% in dividend yield, the dividend is going to be a major part of the shareholder return. And a lot of people assume that the dividend is just, not part of the returns because some people maybe that are in retirement might use that dividend and take it out to pay their bills and such. But if you're, reinvesting the dividend and buying more shares, it can really act like a snowball. And at the end of the 10 years, you could have just so many more shares paying you such a large dividend that you could, experience some real gains this way. So I've input the company's current dividend that they pay out, which is 2.18. And for the dividend growth rate, I've assumed 3% and 100% of dividends reinvested. And once again, the reason I've gone with 3% dividend growth is because I think it's a nice average over the past 10 years, a bit higher than the last 3 years, but a bit lower than the past 5 and 10. So, according to all of these assumptions, I've come out with the yearly total shareholder return of 17% for the next 10 years, which is extremely high, I must say. And I don't think that these assumptions that I've input are out of this world. I think it's very possible that British American Tobacco could hit these all of these metrics. So what British American Tobacco being a C rating means is that the risk is definitely higher. But when investing, you also have to look at the potential reward. And so is the risk of British American Tobacco not being such a high quality company rewarded by this return? In this case, 17% might be really good, but this is just for you as an investor to figure out for yourself. That's it for this video. I really hope you enjoyed it and that you learned something from it. If you want more content like this, if you want more analysis of quality companies, you can check out my research platform. I'll see you in the next one. Peace.